Thanks for tuning in to the weekly news recap. I'm Megan Christensen from Unchained. Stacks hits all-time high in total value locked, bolstered by DeFi growth. It's been an extremely positive week for Bitcoin's price action and the general crypto markets, with the price of Bitcoin and Ethereum surpassing $52,000 and $2,800 respectively on Thursday. Notably, Bitcoin regained the level of $1 trillion market capitalization. Also this week, Stacks, a Layer 2 protocol enabling smart contracts on Bitcoin, has achieved a new milestone with an all-time high total value locked, TVL, of 85 million, signifying a more than 400% increase in the past 4 months. Data from DeFi Llama reveals that the surge is primarily driven by ALEX, an open-source, decentralized exchange protocol on Stacks, contributing over 80% to the TVL. ALEX's growth is notable, with its TVL jumping nearly 558% since October 1st to $68 million. The native tokens for Stacks and ALEX have also witnessed significant appreciation, with STX increasing over 300% and ALEX by about 520% in the same period. The forthcoming Nakamoto hard fork upgrade for Stacks, coinciding with the Bitcoin halving event expected in April, aims to improve transaction throughput and enhance finality guarantees, further solidifying Stacks' position in the Bitcoin landscape. This week, the Blockchain Association, representing the cryptocurrency industry, voiced its opposition to Senator Elizabeth Warren's Digital Asset Anti-Money Laundering Act. Their open letter, endorsed by 80 former military and national security professionals, warns that the acts could inadvertently weaken U.S. national security and drive the crypto industry overseas. This public stance reflects a broader trend of strategic communication and policy debates, although Capitol Hill insiders suggest such efforts might have limited impact on actual policy changes. In a contrasting scenario, blockchain technology was spotlighted for its potential to protect data privacy. At the State of the Net 2024 conference, Congressman Dan Beyer, co-chair of the Congressional AI Caucus, proposed leveraging blockchain for data privacy. Amidst public concerns about data collection and misuse, Beyer's suggestion, supported by Representative Bill Foster's advocacy for national digital signature linked to blockchain, signifies a growing interest in blockchain's non-financial applications. New York Attorney General Letitia James expanded a lawsuit against digital currency group DCG, its subsidiary Genesis, and crypto exchange Gemini. The lawsuit, originally citing $1.1 billion in alleged fraud, now asserts a staggering $3 billion figure. This escalation follows additional investor claims of being misled and defrauded, particularly by Genesis. One Genesis creditor, identified as BJ, expressed relief at the lawsuit's expansion, acknowledging the New York Attorney General's support for crypto creditors. They told Unchained, quote, "We're very happy about today's complaint because it finally recognizes officially that we were victims of fraud by Genesis and DCG directly," end quote. Attorney General James emphasized the need for stringent cryptocurrency regulations in light of these alleged fraudulent activities, while DCG denounced the charges as baseless and vowed to contest them vigorously. In contrast to these legal woes, DCG showcased robust financial health in its recent shareholder letter. The company recorded $210 million in Q4 revenue, and its valuation soared to $4.4 billion in 2023, a significant jump from the previous year. Bankrupt cryptocurrency exchange FTX has agreed to sell its custody unit, Digital Custody Incorporated, DCI, to CoinList for a mere $500,000. The sale price starkly contrasts with the $10 million FTX paid for DCI just months before its collapse in 2022, highlighting the dramatic downfall of Sam Bankman-Fried's empire. DCI was initially intended to provide custodial services for FTX.US and LedgerX. However, following FTX's bankruptcy filing on November 11, 2022, these plans never materialized, leaving DCI with limited operations. This sale forms part of FTX's broader strategy to repay creditors, as the company offloads its subsidiaries during the bankruptcy process. The filing noted the sale's urgency, citing the need to avoid additional operating expenses. The sentencing of Changpeng CZ Zhao, the founder and former CEO of Binance, has been postponed to April 30th. Originally scheduled for February 23rd, this delay was announced in a Seattle federal court with no immediate explanation from U.S. prosecutors for the postponement. Zhao, out on a $175 million bail bond, had his travel requests to the United Arab Emirates denied due to concerns over potential flight risk. He faces charges of money laundering and violations of the Bank Secrecy Act, BSA. Following his guilty plea in November, Zhao stepped down from his role at Binance. The exchange itself settled with the U.S. Department of Justice for $4.3 billion, resolving criminal investigations. Zhao has already paid $50 million in individual fines and is facing a sentence of up to 18 months, although prosecutors have indicated that they could seek to extend the sentence up to 10 years. Franklin Templeton has joined the competitive landscape of the firm seeking to launch a spot Ether ETF, as indicated in their recent SEC filing. This move follows their successful spot Bitcoin ETF launch and demonstrates an interest in potentially staking Ether for the fund, differentiating their approach from other contenders like ARK21 shares and BlackRock iShares. A decision from the SEC regarding spot Ether ETFs is expected to happen in May. In a startling breach of security, the South Korean-based crypto gaming platform PlayDapp fell victim to a major exploit, resulting in a loss of $290 million worth of tokens. This incident unfolds in two separate attacks within a span of 4 days. Security experts at PeckShield identified the compromise of a private key as the likely cause. The initial attack occurred on February 9th with an unauthorized wallet creating 200 million Play tokens valued at $36 million. Subsequently, despite PlayDapp's offer of a $1 million, quote, white hat reward, end quote, for the return of the stolen assets, the attacker minted an additional 1.59 billion Play tokens on February 12th, inflating the supply beyond its pre-attack level of 577 million. PlayDapp swiftly responded, pausing the Play smart contract and urging users to halt transactions. PlayDapp also announced plans for a contract migration. Time for fun bits. In a humorous twist that caught the crypto community off guard, President Joe Biden's social media team posted an image of him with laser eyes, a well-known symbol of support in the Bitcoin world. This unexpected foray into meme culture left Bitcoin enthusiasts both thrilled and puzzled. The laser-eyed Biden, which first appeared in a TikTok video joking about rigging the NFL season, resurfaced following the Kansas City Chiefs Super Bowl victory. While some Bitcoiners interpret it as an unlikely nod to cryptocurrencies, the image actually stemmed from the quote, Dark Brandon, end quote meme, a tongue-in-cheek portrayal of the president as a superhero. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com. That is unchainedcrypto.substack.com and sign up for our free newsletter so you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Nelson Wang, Matt Pilchard, Juan Aronovich, Megan Gavis, Shashank, and Margaret Correa. This recap was written by Juan Aronovich and edited by Jeannie Kim. Thanks so much for listening. See you next week.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.